So as soon as I woke up today, I started reading, just glancing through some news apps. And then at New York Times, I see this article. 2.4 million claimed US unemployment last week. Jobless claims reached 38.6 million in 9 weeks. That is a crazy high number. And then below that, I see New York Fed chief says it's impossible to know economic outlook. Below that, the Atlantic lays off 17% of its staff. And then below that, we see Victoria's Secret plans to store closures as Bath and Body Works sees sanitizer surge. Victoria's Secret, so it's closing around 250 stores in the United States and Canada this year, cutting its fleet to about 850 locations. Below that, we see Macy's reports a 40% drop in sales. These are the news that I just woke up today to. That is absolutely insane. And then I said, oh, okay. Alright, that doesn't sound good at all. There's no good news in this article at all. Then I quickly jumped to the other news app, MarketWatch, and the article says, stocks turn slightly higher early Thursday after weekly jobless claims, which was a disaster by the way, final earnings reports, which is a disaster for many of the companies reporting this month, and it will be even worse for the companies reporting in Q2 and later on probably, and the rising tensions between China and US. So despite all of these bad news, really bad news in this article, the article says the stocks are still going higher. So the fundamentals are not justifying any of these recent stock rallies anymore. Then I decided to check how the big dogs are doing, so Dow Jones, S&P 500 and Nasdaq. As expected, Dow Jones keeps climbing higher and higher. So back during March 20th, Nasdaq fell almost 40% since its all-time highs, but now it recovered so fast and it keeps climbing up and up, and it's sitting at around 24,700, and that's about 20% down from its all-time highs. It is quite a bit down still, but the V-shaped recovery that Dow Jones is showing does not seem to be very healthy at this point. S&P 500 is showing similar trends. It fell to really low levels back in March 20th from its all-time highs. Now it keeps climbing higher and higher every day. It's still down about 13 to 15% from its all-time highs. Nasdaq showed the same trends. Nasdaq is actually up year to date, and it's only about 3% down since its all-time high levels. It kind of makes sense for Nasdaq since some of the companies that are really benefiting from this global issue that we are experiencing are pulling up Nasdaq, just like Amazon, Microsoft, Nvidia, Apple, Tesla. All of these big dogs are really pulling up Nasdaq. But keep in mind, unemployment has reached some unprecedented levels since the Great Depression or World War II. Right now we have around 38.5 million unemployment claims. The good news is that as the economy is opening back up very soon, and in some states it has already opened up, some of these people will go back to work. But definitely not all of them are going back to work. The companies are cutting down on their employees. Once the economy is open back up, that's where we are gonna get to know where the whole economy is standing, how the consumers are reacting, how the companies are restructuring during this whole time. Casinos, as all of the businesses have been closed during this whole time, so they've been bringing zero revenue for the past couple of weeks. However, their stocks are skyrocketing right now for many of them, just because they are hoping that once the economy opens back up, they go back to a normal business, which I'm afraid it's not gonna happen. It's not gonna be like wherever we stop, we're gonna start from that point. Things have changed during this time. Similar to this, all of the high-end restaurants are closed nowadays. Only those that have a drive-through are opening and they're bringing in a lot of business. But the high-end restaurants are completely closed for weeks now and they're bringing literally zero revenue. However, most of their stocks have been more than 50% up since those March lows. One of them that comes to my mind is Texas Roadhouse. The stock fell at around $33 per share, but right now it's 50 or more than 50 as of today. And this restaurant has been literally closed during this whole time, and it doesn't really add up why the stock is going up. One possible explanation to why stocks are just going higher and higher, why many stocks are going higher and higher, is because Fed is injecting a lot of money into the economy. Federal Reserve has been injecting trillions of dollars in the past 2 months into the economy in different ways and forms. This really builds up consumer confidence and investor confidence because they see that the Federal Reserve is here to rescue the economy and rescue stock markets so it doesn't go to even worse levels. So the market sees this as a positive indicator and then starts climbing higher. As soon as it climbs higher, and it goes even higher every day because the Federal Reserve is backing up everything, people, retail investors, are deploying a lot of cash into the market because of the fear of missing out, deploying a lot of cash into the market, investing, buying stocks, increases the stock prices as well because there's a lot of demand in the industry, in the stock market, which drives up the price. Federal Reserve is doing what they need to do right now, but this $1 trillion injection into the economy is saving the economy from a catastrophe right now. However, the $1 trillion injections into the economy will have some lasting effects since the country has too much debt right now by printing money. Federal Reserve has to always try to balance their assets and liabilities. Right now their liabilities are way higher than their assets. So in the next coming years, Federal Reserve will try to apply different strategies to bring down the debt that they have right now. The big stock rally that we see this week in the stock market comes due to the fact that the Federal Reserve Chairman Jerome Powell said that we are not out of ammunition by a long shot. This means that they still have different methods that they could apply to save the economy. They could do a lot of asset purchasing, a lot of printing. In one word, they've got the capacity to do whatever they want. As we said, the Fed will do anything to save the economy, and they will. But the reality at some point will kick in because there's so much they can do. The companies are already hurt. Their earnings are destroyed. Even when they open up right now, they will not get back to their December or January levels, at least not until the end of 2021 for most of them. Some of them are really benefiting from this situation. This can be seen because a lot of stable companies that have a really good history of giving dividends, they have cut their dividends. A lot of companies cannot do share buybacks anymore because some of them are being bailed out from the government. The others do not have cash in their balance sheet, which is a very troubling factor. The stock rally that we've been seeing can be stopped, and it will probably be stopped once we open the economy back up, once we see that a lot of people are not able to go back to work because a lot of companies are cutting down on employees because their revenues are not the same anymore. There are no consumers coming to shop anymore. Consumer confidence is at very low levels. At that point, stock market will reflect the reality and we will see a market correction. Many of the stocks have already seen their low levels, and I highly doubt that we will revisit any of those levels. However, we will definitely go to some low levels because the economy and the reality in the economy is not being reflected well at this point. Another factor that could possibly help this market correction happen is the re-escalation or the renewed US-China trade war tensions. We have seen recently that Donald Trump has been accusing the Chinese government for not handling the global health issue very well. Because of the Chinese government, the healthcare issue that we are currently experiencing has become global and has caused a lot of deaths. If Trump's threatening in terms of trade war become a reality, we will see stocks go to very low levels, just like we saw some market corrections happening back in mid 2019 due to the trade war that US started with China. Alright guys, thank you for watching and listening to this video. Please leave a like, subscribe to the channel, and I would love to hear your opinion and thoughts on this topic. Will we see another market correction? Will there be a stock crash again? Will there be a US-China trade war? What do you guys think? Please let me know down there by leaving a comment. Thank you.